Happy New Year and welcome back to my channel. Today we'll be discussing the Vanguard VTI, the total US stock market, and the yearly performance, and going back about 10, 15, 20 years just to see the performance over the last few years. Now, if we go back to go back, we go back to 2003. In 2003, this VTI total US stock market returned 31.43%, which is pretty good. 2004, it returned 12.57%. 2005, 6%. 06, 15.66%. 07, it returned 5.56%. Now in 2008, it had a decline of minus 36%, but that was because of the big U.S. stock market and the bubble in 08 where, even though the stock lost 36%, most of the people lost like 80%, 90% of their portfolio. So that was one of the biggest stock market crash in U.S. history. It was 08. And they lost 36%, which is pretty bad, but still not the worst. But the following year, in 09, it rebounded with a 28.8% return. 2010, a return of 17.26%. 2011 wasn't a great year, but we didn't lose any money that year. In that year, it returned a return of 1.06%. 2012, it rebounded up to 16.41% return on your funds. 2013 was a great year. It returned 33.51%. 2014, return of 12.56%. 2015 was an off year. You didn't lose any money in 2015, but you only gained 40% return on your investment that year. And the following year, rebounded with a 12.68%, which was 2016. And 2017, it returned a whopping 21.16%. 2018, we lost, it was a negative 5% loss. But in 2019, the following year, it exploded with a 30.8% return on investment. So over the last, say, 20 years, there's only been 3 years in 20 years that the VTI, Vanguard Total US Stock Market, had a negative return. So, you can't really go wrong with that. And all you do is you buy the index. But in Canada, where I'm at right now, we don't get the index over here. We have to use ETF. So we don't. The Vanguard Index Fund is not available in Canada. Our only option is buy the ETF, which is the same thing. The only difference in the ETF and an index fund is, with an index fund, if the market is crashing on any particular day, you cannot sell your fund until the end of day. With an ETF, it's traded like a stock, so you can buy and sell your shares of that fund any time of the trading day. So that's the only real difference. Is you got more control over your funds with the ETF, but it also gives you it's also a bad thing too, because if you start panicking, you'll probably sell. Well, the index, you don't have the option of selling till the end of day. So if you see your money going down in the tank, you have no choice but to watch it go down in the tank. With an ETF, you can sell it and buy it as a stock. So there's more flexibility there. So for some people that's good, for some people that's bad. For me, it's okay because I'm a long-term investor. I don't sell my stocks. Whenever I buy something, I keep it to the end. So that's my philosophy. But let's go over 2020 now and what happened from last year, January 1st to this January 1st. So over the 1 year period from last year to this year, the Vanguard VTI total U.S. stock market has returned 18.86%, which is pretty awesome. That included the March collapse of the market when it dropped about 30%. Even though the 30% drop in March of the market, still it returned 18.86%. So that's pretty awesome. Now, if we were to go back 1 month, the return would have been 11%, 11.80%. And if we went back 3 months, return was 5.74%, which is still not bad. And like I said before, the 1 year return is 18.86%. A 3-year return is a 13.15%, and a 5-year return is a 13.90%. And over a 10-year period, you're looking at a return of 14.02%. So if you're like an investor like me, I'm what you call what they call it, rule one investor, which is rule number one is you don't lose money. So I'm not a high risk investor. I invest in things that guarantees my principal and grows my principal. So and if you want to grow your principal and guarantee your principal, nobody guarantee, because nothing is guaranteed. In everything there's a risk, even in the stocks, and in the index and ETF, there's always a risk you can lose your money. But the risks are a lot less when you invest in the index or the ETFs, because it's a wide variety of stocks that are in the funds. In the VTI, you got over 3,600 stocks in the fund, which is every stock that's in the U.S. total stock market. So for your fund, like I said before, for your fund to fail, for you to lose all your money, every company in the U.S. stock market would have to collapse on the same day. And if that was to happen, pretty much the world would be over after that. So everyone would be out of jobs. It'd be chaos. Civil wars, pandemic. So the chance of that happening are pretty slim. And nobody in the world wants that to happen. So the governments will do everything they have to do for that to happen. As you can see that right now, we're going through a pandemic right now. There are like millions of people around the world out of jobs. A lot of uncertainty in the markets and in people's lives. There's a lot of people getting, in the U.S. right now, there's like a big looming eviction coming up to, they're saying maybe like 50 million people will be homeless in a few months because, landlord wants their money and people don't have the money to pay the landlord. So, and the governments right now are giving stimulus to the citizens. Sorry about that. So the governments are giving stimulus to the citizens, so the citizens can pay their rent, buy things, keep the economy going, and pretty much weather the storm until this is over, until they can get a vaccine, just everyone to be okay. So no government, every government in the world right now is doing their best to keep their economies going and to keep everything running to the best of their ability. It ain't gonna be the same, but they're doing their best. That's all you can do. So that's how my Vanguard VTI is doing right now. Right now, everyone's talking about there's gonna be a major market collapse, gonna be a reset. All the stocks in the market are overpriced, which is fine. As a value investor and a rule number one investor, the best time to buy stocks is during a recession. When people start panicking and selling their stocks, that's the best time to buy shares in stocks. So I have a lot of I'm invested in the VTI, and I'm also invested in a couple other stocks, and I'm also invested in a fund group for my employer. So it's it's not bad. So I'm invested in a few stocks, few shares, indexes, ETFs. I'm not worried about a market crash. Even if the prices go down, I'm still gonna buy. You buy the dip. So if the shares that you're in drops 10%, all that means is you buy more. If it drops another 10%, you just keep buying. The lower it goes, you keep buying. Because the one thing, the U.S. stock market and any stock market always goes up in the end. So it might drop 10, 20, 40, 50, 60%, even 90%. But eventually it will go back up. And when it goes back up, it goes almost to the moon. So if you check out the history of the U.S. of the stock market, it always goes up. It does go down every once in a while for corrections, recessions, stuff like that. But it always goes back up. So that's one thing you can be sure of. It may go down, but it will go back up. And when it goes back up, that's when millionaires are made. So if you had invested like $10,000 in Amazon when it first came out on the scene, like 20 years ago, $10,000 right now would be worth over almost $3 million. Same as Tesla. Tesla was going for $7 a share 20 years ago when it first came out. Now one share of Tesla, it's going for like $700 right now, and that's after it was going for $2,000, and it's split. and they're predicting Tesla to hit about $8,000 per share in a few years. Right now, Amazon is going for $3,000 a share right now. So, when things go bad, when the recession hits, and most of us, even though we have stocks and investments in the stock market, we want to see a few collapses. We want to see the prices go down. We want to see a lot of good companies like Apple and Facebook and Tesla. We want to see all these companies drop 20, 30, 40%, because that's a buying opportunity. Because even though it drops 30, 40%, and if the company is a good company, if the books are good, the fundamentals are solid, it's going to go back up. A company can drop 40% today and rebound tomorrow and go up 80%. So, those of us that are in the stock markets and, trading and investing for the future, we know that, stock market crashes and, drops and volatility, that's a good time to buy, and that's a time to get rich, I guess. So that's all I have for now. Happy New Year again, and don't forget, I'm not a financial advisor. I'm not giving you financial advice. These are just for educational and entertainment purposes. This is just my financial journey. I'm not giving anyone any advice. So for your own portfolio, do your due diligence, research your own. If you have any questions, please leave me a comment down below. If there's something you want to ask me, I'll research it for you if you like. And that's it. Everyone take care, stay healthy, and have a good night.